now we have an incentive that says all the store of value people that have accumulated Bitcoin, now they want to move Bitcoin forward because they'll make more money if they start moving Bitcoin forward into a medium of exchange.
Is it possible that some of these Bitcoin treasury companies that are accumulating large amounts of Bitcoin, from MicroStrategy down to the tens or many hundreds of millions of dollars, the first port of call for them to develop for Bitcoin financial services could be as liquidity providers to the Lightning Network?
The Bitcoin treasury companies are seeing this golden opportunity, and it starts to behave like that. So I think we've got a lot of momentum right now to start making some meaningful progress towards Bitcoin as a medium of exchange.
Archie.
What we did with Amboss, after creating the Lightning Network Explorer, we created a marketplace so that people could say, hey, I need liquidity. And it really started off somewhat similar to local Bitcoins. I don't know if that was like around your time, but basically like, who could I buy Bitcoin from? Well, instead of buying Bitcoin itself, which is money and, often requires licenses, well, we can sell a Lightning channel, which is not money. It's infrastructure. It's basically a business can say, hey, I want to get plugged into this Lightning network. Who can I pay to give me that connection? And, we're in the place to provide that service. So we'll pay Bitcoiners to open channels to the businesses that need to receive payments.
So we saw, perhaps it was a couple of months ago, Jack Dorsey's block announced that they'd earned something in the order of 8 to 10% yield on Bitcoin. I'm just trying to remember the value of the Bitcoin they put up for liquidity. It might have been like 10 million liquidity and they earned about $1 million on that or something like that. How were they going about doing that? Is that opportunity available to everybody to do? And are those returns scalable?
This one's complicated. What I just explained was for a business, being able to have the liquidity to receive payments, sometimes called inbound liquidity, actually has a market value. And what Block has is an incredible user base that's buying Bitcoin.
The merchant network that they serve, right?
Well, actually on the consumer side.
Oh, okay.
So this is Cash App users.
Uh-huh. Yes.
So they go into Cash App, they put in their dollars and they get Bitcoin for it, and then they withdraw it to self-custody, often over the Lightning Network. So that means these payments are flowing out of Cash App into the broader network. And that's eating up the liquidity at the other end. So what Block figured out through their C equals program is there demand to reverse the payment flows so they can do the withdrawal volume and then reverse it. And they actually make money as the payments start to flow back to them. And they can provide that liquidity to other parts. So they're basically, with all that withdrawal volume, they're selling liquidity in that way. It's definitely something deserving of a diagram because it's very non-intuitive. But because Lightning is completely credit and debt free, there's a market for liquidity. And that is actually what Cash App is generating by doing all those withdrawals into self-custody.
So is it possible that some of these Bitcoin treasury companies that are accumulating large amounts of Bitcoin, from MicroStrategy down to the tens or many hundreds of millions of dollars, some of the smaller ones are accumulating, that the first port of call for them to develop for Bitcoin financial services could be as liquidity providers to the Lightning Network? Do you think that can scale? Is there a demand for billions of dollars in liquidity in the Lightning Network? Or is that something like, am I posing that as like a chicken and the egg sort of thing? If there was more liquidity, there'd be more merchant adoption. And if there was more merchant adoption, there'd be a greater demand for liquidity as well. So how do you look at that? Have I framed it correctly? Is that what's required on both ends of that equation? We need more merchants and more liquidity. And if it's concurrent, all the better.
Yeah. Overall, payments are largely a network, and there is a network effect here.
Mm-hmm.
One thing is Lightning is much better at smaller payments because, it's just been regular Bitcoiners that are kind of doing this as a hobby to actually create this infrastructure. So we're using like hobby infrastructure to route all of our payments, and it still feels like magic. But the reality is that larger payments aren't really possible because you don't have large capital allocators. So this was what was behind, our desire to work with Bitcoin treasury companies to start taking the massive Bitcoin accumulation that they have and actually deploy it and make it payments infrastructure to support Bitcoin itself. Because Bitcoin is not just a store of value, it's also a medium of exchange. And Bitcoin treasury companies and even early Bitcoiners are actually in a position to help Bitcoin move forward in this payments infrastructure. And what that unlocks is that you could pay for any size payment. I just heard about today that there's a wallet that is actually doing car purchases and home purchases over the Lightning Network. And what I found out is that on-chain Bitcoin payments won't work for them because they don't want to take any exchange rate risk because Bitcoin is still volatile right now. But if you have instant settlement, that's the unlock. So you need to be able to do large payments over Lightning because the settlement happens so fast. Like forget about everything else.
Are we talking exchange rate risk over a 10-minute block settlement period? Is that what we're talking about?
Yeah.
And they think that volatility is too much for them. I guess when you're talking about a huge amount of value.
Yeah. If they have they don't want to put up the money to do the float because that would take away from their cash flows.
Mm-hmm.
It's just very eye-opening to me. But the reality is we want payments to be instant.
Mm-hmm.
And why shouldn't they be? We have the technology, but can we get the Bitcoin in the right spot, in the right placement and the right allocation to actually make these very large payments possible? Because you are going to have difficulty routing a payment that large. If you're doing a $50,000 payment, well, what is the pathway that it's going to take? It's like you're delivering one of those, on one of those trucks with a massive windmill. What road could you actually take? You can't go down an alleyway. That's basically the same problem that Lightning faces. So if we can build the super highways, then we can start moving more of the global economy onto Bitcoin itself. So it could be completely trustless and the payments work faster for whatever size.
Have you had any conversations with Bitcoin treasury companies and have they been willing participants in exploring these types of scenarios?
I think they see a massive opportunity in that space. As soon as we launched our product called Rails, we launched it to be self-custody. And what we learned was most of the Bitcoin treasury companies cannot take self-custody because, it's risk. They've got risk inside their business where their board has to say, hey, we need to use a regulated custodian. Now, it was unfortunate for us to learn that, but I get the point.
Can't you partner with is it possible for you guys to integrate with a registered or regulated custodian, your services with them so that they can essentially use your products through them? Is that possible?
That's where we're at now.
Right. Okay. Yeah.
So
I always like to try to figure out some workaround.
Yeah.
But, you've obviously been down that path. Okay.
So
what's going on there?
Well, the Bitcoin treasury companies, they, for them, they need to find some way to get yield on Bitcoin.
Mm-hmm.
And so
that's a dirty word given the cycle that we went through, but it need not be because we're talking about a completely different mechanism. Then in 2021, it was hypothecation. That's not what we're talking about here.
No.
And so we need to be a little bit more intelligent about how we interpret the words that we're using.
Yeah.
Not all yield is equal, right?
Yeah.
Yeah.
So anyways, Bitcoin treasury companies need to find ways to get more Bitcoin And the way that they're doing that is, issuing new shares or, all this, financial wizardry in order to accumulate more Bitcoin. And, I come along with, the Lightning Network that, okay, if I can just make this very simple for them to just bring the Bitcoin and we're going to get you yield that is based on the actual utility. So we're going to make Bitcoin better, and I'm going to give you access to the yield that can come from this, and access to a new market where you don't have to give up custody of your Bitcoin, you don't have to lend it out or introduce additional risk, you don't have to rehypothecate it. You can actually take your Bitcoin and build financial rails with it, and start routing payments and connecting the rest of the world to Bitcoin payment infrastructure.
Are you able to model any kind of yield projections for these sorts of companies? Are you able to share that or not?
I think at this point, the most important piece is that people get access to this market. And for some of the Bitcoin treasury companies, I think what they're looking at this, and they're seeing it, and I feel guilty for not seeing it myself, but it becomes working capital for them, because Bitcoin is not just an investment. Now it's a tool to be able to access a payments market. And there's a couple of effects of that, is that essentially, Bitcoin can be treated as a tool. It'll be shown as working capital on the balance sheet, and there might be tax benefits to it as well. So the Bitcoin treasury companies are seeing this like golden opportunity to not only change some of the classifications that they have on their balance sheet, but also do something that is meaningfully supportive to Bitcoin, that actually moves Bitcoin forward. When I think Bitcoin treasury companies are going to run into a PR crisis, because, I think a lot of the hardcore Bitcoiners are like, what are you doing? You're just in this for yourselves. There's like stock prices and all this stuff.
The financial engineering aspect of it. But then we've got this potential other opportunity that's opening up.
Yeah.
That says, okay, you've got the Bitcoin. Now what? And you're here like saying, hey guys, have a look at this, right? Yeah. And I think that's incredibly appealing to them. And we should be mindful that if I were to use Michael Saylor and his company as an example, when they first started off, they were just looking for a solution to the inflation fiat debasement problem. Then they realized, hey, there's a capital market appetite for us to raise some debt. They did that. And then November 2024, there was just something completely different happened. There was a massive explosive demand for them to raise capital at a scale that they hadn't anticipated. Even Saylor said, we kind of stumbled upon this opportunity. And now with guys like you building what you're building, it sort of, weaponizes, it becomes an incredible financial instrument that can open up. So I just want to go back. Here we've got a bunch of companies using Bitcoin as a store of value, and everyone's lamenting the loss of Bitcoin as a means of exchange, when in fact, it may turn out that that's going to be the biggest catalyst towards propelling Bitcoin as a means of exchange as well. So it's kind of like a symbiotic relationship. One enables the other, even though it's like a second order effect. Who cares, right? If it happens, who cares? If it's coincident, who cares? At least it's an effect. And the more people that use it, the more people adopt it.
The biggest thing for me, I think Bitcoiners are really good at this, is identifying the incentives. And now we have an incentive that says, all the store of value people, the people that have accumulated Bitcoin, now they want to move Bitcoin forward because they'll make more money if they start moving Bitcoin forward into a medium of exchange. That like Bitcoin is not just what's, increasing the value of your company, but it's going further than that, that you've bought a piece of the financial system of the future, and it starts to behave like that. So I think we've got a lot of momentum right now to start making some meaningful progress towards Bitcoin as a medium of exchange.
Are you able to talk about the types of customers who are most receptive to your pitch?
Let's see. I think most of them are like early Bitcoiners, high net worth Bitcoiners.
Mm-hmm.
What we didn't expect, it kind of stumbled onto this one as well, is all of Islamic finance.
Oh yeah, because of the no interest, right?
They can't do, lending or what they term riba. And so we're really keen to start exploring this a bit deeper because there's deep pools of capital that are looking for returns, but it needs to be through an honest way.